And let's chat commodities now, where you have seen pressure continuing for energy space especially, and this is perhaps the 7th or 8th week when we have seen declines continuing for that space there. On your screens, 0.25% of a decline coming in for the Brent prices, and the NYMEX is still trading below $97 a barrel. Well, the data from US has been quite mixed. Apart from that, you have seen the US inventories continue to gain up on the higher side, and that's the pressure the markets are seeing that's impacting the prices as well. The precious metal space in the meanwhile also seems to be heading for a third week of a decline here. 0.5% down coming in for the gold prices, 1.5% down for silver as well. And you have seen some decline coming in for the Indian markets. Even as we are trading on a premium in the futures and the spot markets, there is a definite decline coming in for this space as well today. So more than 2% down for silver on MCX, 49,000 is back. And the gold prices on MCX also have broken below 30,000 rupees per 10 grams. Some bit of a profit taking coming in for the base metal sector as well, especially copper. Remember, that has seen a lot of support in the recent days because you have seen the LME inventories continue to decline for a 40th straight day yesterday. That has been supportive. But having said that, markets really are watching out for some more direction in the international markets. And ahead of that, there is choppiness here. You also have seen data that has come in from FOMC, also not very strong side. And that is the reason, some bit of a decline coming in because of that. Flat, of course, on MCX, but most of the base metals on LME especially have seen a constant decline coming in. So 0.5% of a decline coming in for that sector as well. On your screens, copper, lead, zinc, nickel, all of them have seen a decline there. You also have to take a look at the dollar index because much of the cues would be coming in from that. We have seen the dollar index continue to hold below that 80 mark. The lows that you saw in the markets yesterday or day before were at around 79.30. From those kind of levels, there's a bit of a recovery. It's trading at a near 1 week highs at this point in time. But as I said, the markets are watching out for more data to be coming in. Next week, of course, would be important when you would have Chinese trade data coming in, and that would give you further direction on what way the prices really could be headed. Let's get the gold and silver prices back on your screens, especially the weekly markets there, because we have seen a lot of choppiness coming in for that one. The Indian physical markets have not seen much of a buying coming in. Also, if you look at the Chinese data that has come in for the month of September and October, shows that the physical buying in these commodities from that sector also has been slightly on the lower side. So no buying on ETFs, not much of a physical buying also coming in. It's only the Indian rupee that has been volatile and that has been keeping the gold and silver prices higher in the Indian markets. But apart from that, not much really happening in the international markets. Most of the people are giving you a sell call in the precious metal space, even as it's Diwali and even as you were perhaps wanting to hear a buy calls. That is not happening. So near term short calls coming in, but for the longer term, many analysts come out say believing that $1,300 on the lower side could be a support, and on the higher side, 1450, 1480 is the kind of range coming in till the next Diwali. That's the level most of the experts are working with. But just coming back to energy space yet again, and that is one space that continues to see a lot of pressure. This is the 8th straight week, as I said, when you have seen declines coming in for this space. The geopolitical concerns are pretty much out of the system right now, and that is not supporting the prices. Having said that, the US inventories have been building up for a 6th straight week this time around. And apart from that, you also have seen the point that while the US inventories are the highest in 2013, there's not too much of a demand coming in from Europe as well, and that's another factor that has put some pressure on prices. Let's get in then. Rajini Panicker, she's head of commodities research, Phillip Commodities, and she joins us live on the show. Rajini, hi, welcome. How would you look at the energy space? Because this is one space that has seen a constant decline for many weeks now.
Right, Manisha. In fact, if you remember when I was on your show the last time also, I indicated that we could look at some amount of weakness coming in for crude oil for two major factors. One, because the hurricane season was over, which would take away the hurricane premium. And second, because most of the U.S. refineries go into maintenance and therefore the stocks for crude oil could increase. I think those two factors, apart from the general weakness that we have seen in terms of weak economic data, has weighed down on crude, and the steady fall, therefore, that we have been noticing in crude. So having said this, from the way we are looking at crude right now, it is at a level where it is nearing the support level of about $95. If the support holds, then we could see some amount of rebound in terms of just a technical rebound to about $101 to $102. So for the short term, a small rebound following the sharp declines cannot be ruled out, is what our perception is.
Rajini, how would you look at the precious metal space? Because as we have been talking about, most other experts as well, this Diwali is really different. Not many buying calls coming in for this space. For the near term, slightly longer term, how are you approaching this sector?
For precious metals, what I can say is that, in terms of gold, it has just not been reacting to positive news, which should have, in previous years, seen supporting gold. The classic example is, of course, the U.S. debt ceiling. And we had seen in 2011 that when this entire issue of U.S. debt ceiling came into the limelight, gold hitting its record highs of about $1,900. But cut that to this year, and in October, when we had the same issues for U.S. debt ceiling emerging, gold has not reacted in a similar way. In fact, the gold ETF, the SPDR, saw redemptions of about 4% in a month, which had so much uncertainty in terms of the U.S. dollar, the U.S. Treasury bonds. But still, ironically, as it might seem, the safe haven buying went into U.S. dollar rather than gold. So in such a scenario, when gold is not finding safe haven demand, we continue to think that the trend for gold will remain weak. Basically because, as we have discussed in our previous interviews with you, that gold, after having seen a sustained 13-year rally, will now see a few years of range-bound to weak prices, which has always been historically the trend in gold. So if we have to point out to how the trend looks over the short to medium term, I think we are working with a range of about 1,250 to about 1,375, and that is the range that we broadly expect gold to trade in. On the domestic futures for gold, when we were here last time, we had expected that given the U.S. debt ceiling scenario, some amount of support to come in for gold and possibly a breach about the 30,500 level for gold on MCX. But that too has not materialized. And in the current scenario, we are looking at a possible pullback in gold to about 29,300 to 29,000 levels.